Okay, so this next video lecture is still the continuation of our discussion for the internal control concepts and techniques. So we are now in this second part right here for the internal control components. So we have here the statement on auditing standards, and by the way, COSO stands for Committee on Sponsoring Organization of the Trading Commission. So basically, COSO is a joint initiatives to combat corporate fraud. Okay, so this standard describes the relationship between the firm's internal control structure, the auditor's assessment of the risk, and the planning of the audit procedures. So how do these three interrelate? Basically, when the internal control is weak, the higher the level of the risk will be. And if this risk is high, then there is more audit procedure that will be applied during the audit procedures. Okay, so that's how they relate. Of course, if your internal control is weak, meaning there are a lot of risks that exist. So therefore, more procedures should be undertaken to detect or discover any misstatement or fraud. So we have here the 5 internal control components based on these standards. So the first is the control environment. So of course, this will include the integrity and ethics of the management, the organizational structure, role of the board and the audit committee, management's policy and philosophy, delegation of responsibility and authority, performance evaluation measures, external influences, like the regulatory agencies and the policies and practices managing human resources. So of course, all of this should be considered in determining whether the internal control is weak or effective. Okay, if these elements are having strict policies or they have their procedures that are strictly followed, so meaning the internal control will be effective. Okay, the next component is the risk assessment. So here, this is to identify, analyze, and manage risk relevant to financial reporting. So of course, this will be influenced by the changes in external environment, risky foreign markets, significant and rapid growth that strain the internal controls, new product lines, restructuring or downsizing, and changes in accounting policy. So all of this will affect the financial reporting of an entity because they have to add or they have to comply with the standard. But since these types of transactions seems to be complicated, so there might be some standard which will not cover some of these transactions, so it cannot be addressed, and therefore it may lead to misstatement of the financial statements. So that's a risk. The third component is information and communication. So the AIS should produce high quality information which identifies and records all valid transactions, provides timely information in appropriate detail to permit proper classification and financial reporting, accurately measures the financial value of the transactions, accurate records also of the transactions in the time period in which they occur. So this is also important because this will later on affect the quality of the financial statements that will be presented or prepared by the management. So auditors therefore must obtain sufficient knowledge of the information system so that they will be able to understand the classes of transactions that are material, how these are initiated or how they input the data, the associated accounting records and accounts that they used in processing, the transaction processing steps involved from the initial stage of the transaction until the preparation of their financial statements, and the financial reporting process that they use to compile FS disclosures and estimates or their output. So this is what the auditor should be concerned about. So they will check if indeed the entity followed this correctly. And if their internal control is able to detect the errors related to this procedures, okay, so therefore the auditor can either rely or not, okay, with the internal controls of the entity. So number 4 component is monitoring. So this is the process of assessing the quality of internal control design and operation. So of course, they should check separate procedures. They will test the control. So it will be done by the internal auditors. So they will check if indeed internal control will be able to detect, correct, or prevent any error or fraud that exists. Aside from that, they should also have the ongoing monitoring. So the computer modules integrated into routine operations, management reports which highlight trends and exceptions from the normal performance should be evaluated from time to time to avoid any error or misstatement or fraud. And the last component is the control activities. So these are the policies and procedures to ensure that the appropriate actions are taken in response to the risk that was identified. Of course, this is to check if indeed the internal controls are effective. And this fall into two categories. Our control activities fall into two categories. We have the IT controls. Of course, this is related specifically to the computer environment. And we also have the physical controls, which are related to the human activities. So we will discuss these two types of controls. So first is for IT controls. So we have two types of IT controls. We have the general and application controls. For the general controls, this refers to the entity-wide computer environment. So we have here the examples, controls over the data center, the organizational databases, system development, and program maintenance. Meaning these controls are for a system-wide control of the IT. For the application controls, on the other hand, this will ensure the integrity of specific system. So the example of this are controls over sales order processing, accounts payable, and payroll application. So meaning it is a specific control for every transaction or process. Okay, so those are the two types of your IT controls. For the physical controls, so we have 6 types of physical controls. The first is transaction authorization. So of course, this control is used to ensure that employees are carrying out only those transactions which are authorized, and those unauthorized transactions will not be processed. So this will be applied for their everyday procedures. Or this can also be applied for specific or non-routine transactions. So authorization is very important before a transaction can be processed. Second, segregation of duties. So here, this is in a manual system usually. So this is a separation between authorizing and processing a transaction. Okay, so of course, if you are the one who authorizes the transaction, you should not be the one also to process it. This is to avoid fraud, okay, or manipulation of the transaction. So that's why there should be two people who will act as the authorized person to authorize the transaction and the one who processed the transaction. Another segregation of duty is custody and record keeping of the asset. So for example, if you are the cashier who receives the cash, you should not also be the one who will record it in the books of the entity. So this is again to avoid any misstatement or fraud with cash, okay? Because you can manipulate it. Another segregation of duties of course, is to make some sub-tasks, okay, for any of the employees so that they will have no responsibility which are incompatible. So in computerized systems, separation between program coding, program processing, and program maintenance should be employed so that access over the data can be limited only to those who are authorized to access it. Third is supervision. So a compensation for lack of segregation. So some may be built into computer system. So supervision means to oversee, okay, the carrying out of the day-to-day operations of the entity. So this is to make sure that policies are followed and any errors or fraud will be avoided as well. Fourth is accounting records. So, of course, this will provide us with the audit trail, okay, and access to controls, which will help to safeguard the assets by restricting physical access over them. Okay, so only those who are authorized can access it. And lastly is the independent verification. So this is the reviewing of the batch totals or reconciling subsidiary accounts with the control accounts. So this is to make sure that accuracy and reliability over financial records are achieved. So those are the different IT and physical controls, okay, for our internal controls. So we will continue with the next topic. Okay, nested control objectives for transaction, which is also related to this physical and IT controls that we've discussed here.